Good morning. We're here to study SYX, and we'll start by a brief technical analysis. This is the long-term chart going back to 95 when the company had its IPO at about 20, the price that it is now, more or less. And we had this rally here, but then a big dip to almost zero, and now another bull run here. Let's check the short-term chart. Okay. Well, actually I bought the stock about here and sold it here or so, and because I was concerned about the general market, and now I was thinking of buying the stock back, but unfortunately Q4 results were lower than my estimate, but we'll get to that in a moment. Now the stock is below the 50 days moving average. This pullback was really nasty. With so much volume here, I didn't expect this to happen so fast. And now it is below the 50 days moving average, and the 200 days moving average is coming here much below at about 14. Let's see. Technical overview. SYX came off about 1/3 of its price, and it is now below the 50-day simple moving average. The 200-day simple moving average support stands at $14. Now a bit of fundamental analysis. This is the share count over the years, and it has remained really stable and no dilution whatsoever over the years, which is a positive development. And the market cap is now 847 million, and it is actually down 5.4% a year on average since the IPO, where it was in 96 it was $1.6 billion market cap, which is bad, of course. It was 82 million here in 2001, and about 10 times more now. It's amazing how these things change, how fundamentals change over the years. Now, the long-term debt and current ratio. Long-term debt now is almost zero, and the current ratio is 1.79. It deteriorated a bit here on the fourth quarter, but it's okay. It's still okay. As for revenues, well, we had this nice growth here until 99, when revenues were $1.7 billion. Then they declined to a low of 1.547 billion in 2001, and then start growing again. For 2006, results were out yesterday after the close, and they were $2.345 billion, or $2,345 million, and I was expecting just a bit more at 2.4 billion. So a bit below my expectations. Average annual revenue growth since 96 has been 10% a year, and the industry grew 8.3% from 2005. As for gross margin, SYX has 14.62%, and the industry average is a lot higher at 39.53%. And probably that explains why the company is trading at a price to sales ratio of just 0.36 against the industry average of 0.79. So what SYX needs now is to improve this gross margin, which is quite low. And as for earnings per share, again, we had here in 96 and 97 the company was selling a lot less, but it was also a lot more profitable, as you can see here. Well, 2006 is a record here, 1.22 earnings per share, but I was expecting more. I wanted 1.4 because the fourth quarter should have been the strongest, and no, it was weaker than Q3 and Q1, which is really hot for a retailer like TigerDirect.com. So I'm disappointed by the Q4 figures. Net profit margin in 2006 was 1.9%, just this, and the price to earnings ratio for SYX is 18.8, and for the industry average is 27.6. So again, what the company needs is to get more productivity and improve these margins. So let's move on. Fundamental overview. No dilution over the years, and the balance sheet is okay. Revenues are growing 10% a year on a long-term basis, but I was expecting a bit more in 2006. I was expecting 1.4 earnings per share for the full 2006 instead of the 1.22 reported. Fourth quarter should have been the strongest in sales and profitability terms, but it wasn't, with earnings per share of 22 cents against 33 cents for Q3 2006, which is odd. Moving on. Long-term estimates. I consider SYX will grow revenues at a 10% average annual rate for the next 10 years and will have a 4% net profit margin. Well, I'm being a bit optimistic here because I'm considering the company will be able to expand its margin and perhaps 10% average annual rate. I don't know about that because I expect the consumer-led slowdown in the US, so but let's keep it this way. In 2017, SYX will have revenues of $6.08 billion and net income of $243 million. Apply an average 16 times earnings multiple and get a 3.89 billion market cap, and that implies an average annual rate of increase of the share price of 16.5%. Well, I'm looking at least 16%, so this is just a bit above that. And I really love this stock when I held it, but these results were disappointing. And this news of the $1 dividend, I believe that's nonsense. Well, it shows the company doesn't want to invest more in its activity and wants to distribute the profits it had. Probably it's not expecting to have stronger profits going forward. Maybe it is already seeing the consumer slow down. That's why the Q4 results were lower than expected. And $1 dividend doesn't tell me much. Perhaps the stock will pop on that news, but I think it is a selling opportunity because the company missed my expectations at least. General overview for SYX. SYX looks undervalued when considering its revenue and earnings per share multiples, but net profit margin is still low. The fourth quarter numbers were a lot lower than my expectations. SYX will perhaps pop because of the $1 dividend, but that is a nonsense to me. I'll keep it under the radar and possibly buy it on a retrace to the 200 days simple moving average, which stands at about 14. I guess that at 14 those long-term estimates will give me a better return, so I'll keep it. My rating on a 1 to 10 scale is 7, and it's a pity because I would really like to buy the stock back, but these Q4 results were really disappointing. So good luck if you own it. Thank you. Bye.